The flapjacks are flipping. We have a lot to get through in this video here today, folks. Major developments in regards to where the market's headed from here. Major developments on several different stocks we're going to get into here today. Public count up $31,000. Congratulations to everybody out there making a little bit of money. Some big movers out there here today. EL stock up 4.5%, about an $8,200 move to the upside. That stock's now up 54% for us. It's a sneaky mover. Honest up over 4% here today. Nike up 3.88%. Palantir with a very good day. We'll get into Palantir in this video. American Express up over 3%. Cheesecake up over 3%. Celsius up about 2.5%. 5 core subjects we're going to get into in this video here today. Okay. First one is the Fed. No one's paying attention to the important thing that happened with the Fed. Like, okay, they lowered interest rates today. Big deal. There's actually something very significant I need to show you that's going to matter in a major way moving forward and how this moves the market, okay? Second thing is, we're going to talk about a company that could go bankrupt, and it's kind of shocking because you would have thought this company has never been in this position a year ago or a few years ago. Third subject we'll get into is Adobe. Major developments in regards to Adobe. Their earnings just hit. I'm going to take you through what's going on there, some very exciting things. Fourth, AMD. There was a significant thing that happened in Oracle's earnings regarding AMD that I don't think anybody paid attention to, and it's extremely important for the future of AMD, okay? Fifth thing we're going to get into this video, Sofi, Palantir, major news in regards to those. One thing only I need from you guys, busy action-packed video. I just need you to hit that little thumbs up button. If you could just make that little button glow, that would mean the world. Thank you to everybody that's already done that. Make sure you're subscribed here to the channel, okay? 2 pieces of housekeeping before we get into this video. One is, if you're looking to apply to our private stock group, private wealth group, get access to all that, all my course curriculums, become a master of stock market course, millionaire playbook, options mastery, dividend investing mastery, all that good stuff. There'll be a pinned comment down there today that is closing to new members in 5 days. So do keep that in mind. And then we'll open it back up at some point in time in 2026 to new members again. But that's closing in 5 days, and then no more new members will be allowed in there for quite a while, maybe 1 to 2 months. Okay. Second piece of housekeeping we're going to get into here today, before we get in this video, is there's a huge controversy regarding YouTube going on right now. Okay. I'm sure if you're into the YouTube community, you're already aware of this, but basically AI is like banning channels, like scrubbing videos, like it's just going completely insane and not even giving people good reasons. It's a mess, okay? I don't even need to get into all the details in regards to it, but even AI took down our video on the reaction channel. Jeremy Lefebvre Makes Money. It took that down yesterday for no reason, just takes it down. And so it's a huge, massive issue. It's all over X right now. Even a lot of the biggest YouTubers are starting to talk about it. It's going to get much bigger from here. So I just want to let you guys know I'm now starting to post all of my videos also on X. So if you ever want to follow me on X, I always have that linked in the description area down there. That way you guys still have another outlet to watch my videos for free in case this YouTube AI keeps going crazy and just banning videos and just taking them off and just deleting them. It's out of control. And so anyways, I'm posting them still on X. That way you guys still have another place to access them for free. So yeah, there is that going on. And by the way, just so you know, yesterday's video, that video was up for about 3 hours or 4 hours before the AI took it down. So just make sure, I know a lot of you guys work busy jobs. I know a lot of you guys have your own businesses. So it's not like you can watch it as soon as my videos come out. But if you're having an opportunity to watch my videos within that first hour or a couple hours of it being out, it might be worth your time, because you never know. Once YouTube takes it down, then you can't get it back up. It's insane. There's no humans to talk to. It's a mess. So anyways, I want to let you guys know about that, okay? Alrighty, first subject up here, the Federal Reserve. Okay, so something significant happened, and no, it was not the rate cut today. That was everybody knew they were going to cut rates today. Big deal. The key things that happened were, 1, in regards to 26, they're indicating only 1 more cut. That's pretty significant because I think a lot of people were kind of expecting several cuts, right? So now keep in mind that can move around. This dot plot the Fed will put out there, it moves around all the time. So don't just assume, okay, the dot plot shows 1 reduction, 26, that's what we're having. There's a multitude of things that could happen between now and 3 months from now, 6 months from now, 12 months from now, that could change that. So that's something to keep in mind. This is much bigger though. In addition to the rate decision, the Fed also announced it will resume buying Treasury securities. The central bank will start by buying $40 billion in Treasury bills beginning Friday. Now, my guess is how this is going to work is the Federal Reserve will buy treasuries and buy treasuries and buy treasuries, and treasury yields will start going down, 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 down. That's significant. As treasury yields go down further, that could mean more money comes into the stock market, because a lot of people have been very comfortable with getting, 4% plus from treasuries, which has been for the last several years. And there was at one point you could get even over 5% for treasuries, right? So a lot of people are kind of like not that enthusiastic about like buying stocks, because they're like, dude, I'm just sitting over here collecting 4 or 5% right now. I'm chilling, right? Well, if the Fed's going to start buying treasuries and those yields start to go down, suddenly you can't get 4% anymore. Next thing you know, you're getting 3.5%, 3%, right? Savings accounts that were yielding, let's say 3.5%, 3.6%, right? All of a sudden those start to yield 3.1, 2.9, 2.7. People start looking and they're like, okay, like might not even be keeping up with inflation at this point in time. If you can give somebody 4.5%, most people are going to look at that and say, okay, I'm beating inflation, I'm winning. If all of a sudden you start giving people 2.7% on a savings account or under 3% on a treasury, people start saying, I think I'm losing to inflation now at this point in time. I better get invested in the market. That is significant, okay? Additionally, this is something very important to keep in mind, okay? The Federal Reserve announced that today, right? This is a major change, because the last time they were doing quantitative easing, that was the Fed bought massive amounts of treasuries and mortgage-backed securities to support the economy, was during Rona, right? 2020 to 2022, that was a huge, they were just buying everything in sight, right? And that was artificially keeping treasuries yields down significantly. And that's why you could get a mortgage for 2.8%. It was insane, right? Now, obviously, inflation goes out of control. So starting in 2022, they flip. So 2022 through basically this week, right? They're in quantitative tightening mode. Fed allowed bonds to mature without reinvesting. Quantitative tightening, shrinking its balance sheet. Right? But now we're ending quantitative tightening, and the Fed will begin with purchasing treasury bills. Okay? So this has ramifications for a lot of different things. Now, a lot of people aren't thinking it's going to move the 10-year that much. You know what? Listen, okay? I believe it is going to move the 10-year. I believe the 10-year will be going down over the next 6, 12, and 18 months. I truly do believe that. I believe that I believe the Federal Reserve and the government in general and the current administration, I believe everybody wants to get the real estate market starting to move in 26 and 27. The real estate market is frozen. It's been frozen for years, and that's because obviously mortgage rates went insane, right? We hadn't seen 6 and 7% mortgages in decades. It's been ridiculous, right? So you had 6, 7%. I mean, I got almost up to 8% at one point in time back a little over 2 years ago, back in fourth quarter of 2023. So my opinion is they will bring, however they do it, they will get it done, but they will bring that 10-year down. And everybody knows that they want to get that down, right? T-Man wants to get it down, and they'll get mortgage rates, in my opinion, over the next, we can call it 6 to 18 months, kind of in the sweet spot, which the sweet spot I call that 4.5 to 5.5% for a mortgage. And that will get the real estate market moving again. The real estate market's been dead because so many people, even if they can afford to move, they absolutely refuse to sign their name on a 6 or 7% mortgage, because a lot of adults have never had to pay 6 and 7% mortgages. They're used to 2, 3, 4% mortgages, maybe 5%, not 6 and 7%. So even if they had the money, they're like, I know a lot of people that have the money to move and honestly probably want to move, but they're just not moving because literally they're like, I'm not signing at a 6% mortgage rate. That's not happening, right? If all of a sudden mortgage rates go over the next 6 to 18 months in that 4.5 to 5.5% range, you'll get people moving again, because that's where you used to be at. So when you come from 7% mortgage rates down to 4.5 to 5.5, now it looks cheap, especially when you were there for years, right? So this is something very, very significant, and that's what we have going on there, okay? Next thing up here, a company that could go bankrupt, and then we'll get into Adobe, AMD, Sofi, Palantir, okay? You ever heard of the Cracker Barrel? Well, Cracker Barrel, this was a company that you could count on being profitable year in and year out, right? Nicely profitable company. Only year in recent years they hadn't been profitable was during the Rona year 2020. Obviously, that was a whole freak situation. Like basically every restaurant lost money out there pretty much in 2020, right? But this is a company that was very profitable, doing very well for itself. Then it makes some decisions earlier this year that went, let's call it viral on social media, and it got a lot of their customer base very upset around rebranding their logo, around changing their restaurants, and a lot of people loved the old nostalgic look of the Cracker Barrel, and then they tried to change it to this modern look, and people weren't feeling it, and then they felt like a whole bunch of things. The company went woke. There's like a million things, okay? And so the moral of the story is, what has happened to Cracker Barrel is kind of shocking. Their revenues just went down 6% on a year-over-year basis, and they may hear that and like, okay, 6% doesn't seem that insane. In the restaurant industry, your revenue going down is death. You cannot have that happen. And when we're talking 6 percentage points in the restaurant industry, that can take you from a nicely profitable company to a huge money-losing company, just like that. And so what happened here with Cracker Barrel is they were able to bring down some of their expenses, but not nearly enough. And so what ended up transpiring is revenue was down, let's call it a little under $50 million on a year-over-year basis. But look what happened. They ended up taking an operating loss in this latest quarter of $32 million. That's versus an operating income of $7 million in the same quarter last year. So now they're losing a fortune, right? Look at net income. Net income was, they had an income tax benefit that helped them out in a substantial way, right? Because look at their income loss before income taxes, $36 million loss, right? But their net loss ended up being $24 million, helped out by the income tax benefit there, versus $4.8 million in the positive. This is a mess. This is a mess, but you want to know the worst part? You want to know why this company could potentially face bankruptcy? Look at this. They only have $8.9 million in cash and cash equivalents. I know people in real life, individuals that have that much cash. This is not a lot for a big company like the Cracker Barrel that has locations all over the place. $8.9 million, and you're trying to spend a bunch of money doing, like changing this in your stores, your restaurants, and changing that and changing this, right? And you're now taking big losses. What do? You're taking big L's. Your customer base is revolting against you, and you got you're low on money. Like you're really low on money. This is the exact opposite time you want to be taking any risk with your business model. This is a mess in regards to Cracker Barrel. I'm honestly shocked. This stock is not a penny stock right now. Like if there's a stock, like there's some stocks that are under $5 and I'm like, those stocks do not deserve to be there. That's insane. Look at their income statements. Look at their balance sheet. They do not deserve to be under $5. Cracker Barrel, this is a stock that honestly I could see being under $5. I'm like, I don't think people understand the level of risk they're taking in this stock. Again, they might not go bankrupt. They might be able to turn around and get back to profitability, and they might be able to raise money to get through this tough time and all those sorts of things. Maybe that happens. We'll see. Or maybe it doesn't. And if they don't turn around quick here, ladies and gentlemen, it's just math. It's just math. You think they could take much more of these losses? Good luck. That brings me to cake, right? There's obviously a restaurant concept that I buy very heavily, and I bought it for several years now. I'm still buying the stock. I still love this stock. I think it's literally one of my favorite stocks in the market. It was up 3% here today, right? Cake. Look at the difference between somebody like Cake and somebody like Cracker Barrel. Cake's revenues were up 5% in the latest quarter on a year-over-year basis. Net income was up 6% to $32 million in net income. We're talking they're making tens of millions of dollars every quarter, right? $10 million plus in net income a month. Adjusted EBITDA, $72 million in the latest quarter. That was up 12%, versus last year, essentially, right? Additionally, Cake has total available liquidity of $556 million, including a cash balance of $190 million. Not $8.9 million, $190 million. And they're super profitable, right? And that brings me to this point. This next point I'm going to make that's very important. If you can't sleep well at night holding a stock, you can't own the stock. I'm able to continue to buy Cake. I'm able to hold that stock. I don't have trouble sleeping at night thinking about, ooh, Cake, what's going to happen here? If I was holding Cracker Barrel stock, oh, you better believe I'll be sweating bullets right now. I'm looking at that cash balance. I'm like, oh my gosh, they have 8 million. Oh my gosh, they're taking these losses. Oh my gosh, like they're going to have to dilute shareholder value somehow here, or they're going to have to like raise more money, or a bank's going to have to loan. I'm like, what's going to happen? Or are they going to stop all this renovations in their restaurants? And are their customers even going to come back? They might not come back. It might get worse. Sales numbers might even get worse. Ooh, I'd be stressing. Cheesecake? That's not stress. It's no stress. Making bank. Keep making bank. Got bank. At the bank. We're all good, baby. So keep that in mind, folks. Always remember that. If you can't sleep well at night holding an asset, don't buy it in the first place, okay? Next up here, Adobe. So ADBE. What's going on here with Adobe? Their earnings just came out here in the last couple hours. Listen. This is what we call a grade A income statement, folks. Borderline A+. If their revenue growth was just a little stronger, I probably would have nudged it up to an A+. It was like I was debating like A+ or A, and I ended up going with A. Total revenue up to almost $6.2 billion in the quarter from $5.6 billion. Gross profit went to $5.5 billion from $4.9 billion. Look at how well they kept cost of revenue in check. $649 million versus $616 the same quarter last year. They did phenomenal as far as keeping cost of revenue in check. And so gross profit exploded to the upside for the company. R&D, they upped that year over year. We can call it 10%-ish, somewhere in there roughly. Sales and marketing was up year over year for the company. We can call it a little less than $200 million there. G&A, they actually brought that down on a year-over-year basis, which is pretty shocking. So total operating expenses, I thought they kept that in check. It wasn't, it was up on obviously on a year-over-year basis, but it wasn't out of control, especially considering gross profit grew, what are we talking here, almost $600 million in a year-over-year basis, right? Or 550, somewhere around there. Operating income, $2.2 billion versus $1.9 billion in the same quarter last year. Income before income tax is $2.2 billion versus $1.9 billion. As far as net income, $1.85 billion of net income versus $1.68 billion in net income. And then diluted EPS, $4.45 versus $3.79. They're buying shares left and right back, which helps their earnings per share go up at even a faster clip than net income's going up. I love it. I love it. And that wasn't the only good news we got here today in regards to Adobe. This came out as well 10 hours ago, 9 hours ago. ChatGPT can now use Adobe apps to edit your photos and PDFs for free. Adobe plugs Photoshop, Acrobat tools into ChatGPT. Adobe integrates with ChatGPT. So the moral of the story is here, Adobe is obviously very forward-looking here. Adobe's going to continue to partner with a lot of the biggest AI companies, if not all the big AI companies, right? And continue to just make a great ecosystem company. It's a great risk-reward profile on Adobe. It's a great risk-reward profile on Adobe. Now, I don't know if you guys follow me on X or not, right? Like I said before, it's always linked in the description area if you ever want to follow me there. But I posted this 3 days ago. Looks like about 160,000 impressions here. I said, Adobe will be one of those stocks that suddenly 2Xs within a 6-month span, in my personal opinion. And everybody will be like, what the heck just happened? And that's the way I see Adobe. It'll just be one of those stocks that is just chilling. And then when it moves, it's going to be a move. And people will be like, what? Like, what just happened? Right? Like what? Like, this was insane. And a very similar, it reminds me so much of Google in regards to Google. Oh my gosh, like Google's being disrupted. Like they're in big trouble, blah, blah, blah. And next thing you know, all of a sudden Google just, boom, 2X like that. And so, Adobe will be one of those that will be chilling, and then it's going to go on a major run, in my personal opinion, and we'll see what happens. But it's going to be a whole lot of fun, in my personal opinion, right? Next up here, AMD. Then we're getting to Sofi and Palantir. So this AMD situation runs back to Oracle, okay? Now, Oracle earnings came out here after the bell. Now, Oracle, they grew their cloud business very nice year over year, 50%. They grew their software business, 36%. Hardware and services were a little small growth, 5 and 9%. But total revenues went to over $16 billion from 14, so nice growth from Oracle. Nothing crazy, but that's like good, solid growth, right? Now, as far as the expenses, it was a little high. The expenses were up like, they were pretty significant. They were up to 71% of revenue, right? So total operating expenses, $11.3 billion, but a lot of that did come, just so you guys are aware, a lot of that did come from restructuring. So that was a pretty significant number. $406 million there. They also had this like one-off that, in my opinion, really helped the company majorly. Well, it's not an opinion, it's just like math. Look at non-operating income here. This is like a one-off kind of category, right? $2.6 billion. That's usually that line item that usually, if you have some sort of one-off major loss or gain, you slap that in that non-operating income area, right? I mean, almost $2.7 billion is a huge number, right? Especially when it was non-existent. So it made their net income look like it exploded higher, right? 6.1 billion versus 3.1 billion, but keep in mind almost 2.7 billion of that was that one-off there. So it was a solid report from Oracle. I gave them a B grade here, right? It just wasn't nearly as good as you might have thought once you dig into the numbers a little bit, right? Now, the stock's down huge after hours, down like 11%, well under $200. And the thing with Oracle, they always end up somehow underwhelming Wall Street. They always end up doing it somehow. And this one, I think just like people look at the backlog, the revenue performance obligations are supposed to be huge, right? This incredible number. People don't have faith in it. They don't know if that's true. They don't know if that's going to be accurate, right? They're like, oh yeah, OpenAI is supposed to spend this crazy amount with Oracle, but are they actually? And it's fair questions. It's fair questions because we don't know how, we don't know what AI growth will be like next year or the year after. What if growth rates slow a bunch? What if OpenAI gets disrupted by Google in a major way over the next few years? Everybody's thought about Google being disrupted by OpenAI and ChatGPT. What if it works in reverse? Like, these are all things you got to consider, and that's what Wall Street's looking at, and they're like, we're underwhelmed. We're underwhelmed, right? And so stock down to this stock is well under where it was back when the announcement came out that they had the massive OpenAI partnership, and OpenAI was supposed to spend hundreds of billions of dollars with them and all those sorts of things. But where does this get interesting from AMD's perspective? Here's where it gets very interesting, okay? So Oracle sold Amphrey because we no longer think it's strategic for us to continue designing, manufacturing, and using our own chips in our cloud data centers, said Larry Ellison, okay? So they sold off that chip side of their business. Okay. This is where things kind of get more interesting, though. He says, we are now committed to a policy of chip neutrality. So not trying to, promote a certain type of chip over another one, right? Like, whoever you want to use, we're going to give it to you. So they got a policy of chip neutrality where we work closely with all our CPU and GPU suppliers. This is where it gets really interesting. Of course, we will continue to buy the latest GPUs from nvidia, but we need to be prepared and able to deploy whatever chips our customers want to buy. Okay. There are going to be a lot of changes in AI technology over the next few years, and we must remain agile in response to those changes. Such a suspicious statement. Such a suspicious statement, right? Like, how does somebody like myself that's been in the market 17 years and heard, a trillion CEOs say this and that over the years, how do I read something like that? I read it like this. You got to break up with your girlfriend, boyfriend, you're trying to let them off easy, and you're like, of course we're going to still hang out. Of course we're going to be friends, right? Might be true. But it's weird you got to kind of like let them down a little bit like that, right? And Larry Ellison, it sounds like he's basically laying out that our customers, they honestly might want to buy a lot of AMD chips. They might want to use a lot of AMD chips over the coming years, and we have to be ready for that, right? And so the fact that he even brought up NVIDIA in that manner was like strange. Like, why do you even need to bring them up? Kind of strange, right? Like, it almost like a shot at NVIDIA. It's very, very strange, right? Going to be a lot of changes in AI technology over the next few years. We must remain agile in response to those changes. Almost sounding like people are going to be wanting a lot of chips outside of just NVIDIA, and we need to remain agile, ready to basically serve that business up that is non-NVIDIA related. Very, very interesting. Which, if you're thinking about like who's that in reference to, it's going to be in reference to like AMD, obviously. Like they're the next big dog right after NVIDIA, right? And when it comes to AMD and Oracle, This announcement, it came out somewhat recently, right? Oracle and AMD have a major expanding partnership focused on powering Oracle cloud infrastructure with AMD's powerful processors, EPYC CPUs, and accelerators, Instinct GPUs for large-scale AI databases like Exadata and general cloud computing, with plans to deploy 50,000 new AMD Instinct MI450 GPUs. This is the one that everybody wants. This is the one that's going to blow the top off for AMD's business model, the MI450s, in late 2026 for an AI supercluster, solidifying AMD as a key competitor to NVIDIA and growing AI infrastructure market. The collaboration provides cloud customers with a strong alternative to NVIDIA, offering better price performance and open systems for AI. And that's very key. Better price performance. So dang key in regards to this matter, right? It's just math. And all these companies have been spending a fortune with NVIDIA. NVIDIA is going to have to compress those margins. Like, that's the bottom line in regards to that, right? To actually compete better with AMD, because we know AMD, the thing is, like, AMD benefits so much from NVIDIA. NVIDIA doesn't benefit at all from AMD, because NVIDIA, first in the marketplace, right? They charge these insane prices. AMD now comes in ready to finally compete in a major way in 2026. They're already kind of competing in 25, and their revenue growth has been very strong, but it's just like it takes it up to a whole other level when the 450s start getting sold in the second half of next year, right? And so AMD is coming in as a low margin company compared to NVIDIA. Like, their margins aren't even comparable on the net margin side, right? And essentially, AMD is going to be able to likely up their margins significantly over the next few years. Meanwhile, NVIDIA, since they're going to be getting undercut on pricing by AMD, NVIDIA is likely going to have to lower price to try to compete harder against AMD in 26, 27, 28, 29. So that's why I say NVIDIA is AMD's best friend, and AMD is NVIDIA's worst nightmare. That's the bottom line in regards to that, because you're talking about AMD's getting ready to take market share starting at the end of 26 and then especially going into 27, 28, and they're going to likely hurt your margins. It's a double whammy, man. It's brutal. And this leads to NVIDIA and Jensen, right? Man has been everywhere the past month. Have you noticed it? Isn't it a little bit weird? It's a little bit weird, right? He's been everywhere. Like, he's on Joe Rogan. Okay. He's in suits doing interviews with all these business channels in a suit. I'm just like, interesting. Like, it's interesting. Change of, like, how bad are you trying to get across the narrative right now, Jensen? Like, that's what I'm thinking. Like, how bad are you trying to get across this narrative? And we're seeing even more weird stuff where they keep trying to, like, refute these different things. Like, they're trying to refute what Michael Burry's talking about, right? And saying that it's not Enron, and, trying to refute, like, accounting questions, and then trying to refute that chips are getting smuggled into China, and, man, they're just trying to publicly refute all these things, but I don't know. It's getting a little weird, ladies and gentlemen. It's getting a little weird. Now, in regards to AMD and Lisa Su, AMD's Lisa Su, she's come out and said that basically inference, which is using the models, is going to be a much bigger market, in her personal opinion, than AI training, which training was building these models, okay, for all these different companies, right? Inference is the next wave. While NVIDIA dominated the initial AI training phase, Lisa Su sees inference, which is running the models for real-time use, as a next massive growth driver with huge demand from agents, Salesforce, and diverse applications she's talking about. And basically, she believes that inference market is going to be way bigger, and she also believes AMD's actually most well positioned for that. And we'll see over the next 3, 5, 7, 10 years, right, who was well positioned for that. But you got to understand, if Lisa Su has positioned this company the way I think she has, we're going to talk about, a 5 to 10 year runway of growth that should be very, very fun. Very, very fun indeed, right? And so that's me with my AMD shares, man. I'm holding these babies tight. I have no interest in letting those babies go. I got 2,555 shares in the public account. I got massive amounts of shares in other portfolios of mine and private portfolios. I'm going to hold those babies tight. AMD might be the biggest position for me also in the Patreon portfolio. Like, I'm good. Like, I'm not, you could offer me $250 for AMD right now, and I'm not interested. You could offer me $300. If you told me I couldn't buy it back, I wouldn't be interested, man. Bottom line with that. Sofi, Palantir, big news in regards to these stocks. What's going on here? Here's it. Sofi announced a new product today. This is another major step in the right direction for SoFi. Introducing the SoFi Smart Card, the best all-in-one account. SoFi Technologies, the one-stop shop for digital financial services, today announced the SoFi Smart Card, the best all-in-one account. The account offers better choice and control over spending, attractive rewards, and a way to build credit history and high interest on savings balances. The Smart Card is exclusively available to eligible new SoFi Plus members starting today. SoFi Plus, that's like a membership model where you have to pay, I think it's like $10 a month. I believe I pay for it, so I get a higher percentage on my savings account, which way offsets the cost. The Smart Card offers the best benefits of checking and savings products, debit cards and credit cards, all in one account. While people use debit cards to avoid paying interest and spending beyond their account balance, they often miss out on rewards and protections typically offered only by credit cards. That's why this account offer matters, right? And they're talking about members will earn unlimited 5% cash back rewards at grocery stores. That's extremely competitive. And all my credit card people out there, which I know there's some, I would call, I know at least a few credit card experts, I would call them, watch my channel. Tell me, is that a strong offer? Yes, that is. Like, I know you guys know that. Like unlimited 5% cash back rewards on grocery stores, that's a strong offer. Then they're talking about 4.3% APY on savings balances. Man, and this is SoFi just showing that they just keep the pedal to the metal. I think an offer like this is going to be very successful. I think it's going to be very successful when people find out about this and like, wait, what? Oh, shoot, that actually sounds amazing. And you understand what SoFi is going after. You know, what SoFi is really going after here, listen, they want people to have their checking accounts and savings accounts through SoFi. Once you do that, that's the holy grail in the banking system. That's the holy grail in the financial products. When you can have somebody have their savings account and checking accounts, you have the highest level of trust from that individual, right? They got their actual checks being deposited. Right? Maybe they don't call it checks anymore, but your pay, right? Whether you run a business or whether you get paid from a company, whatever. Like, if it's going into a checking account, that's your highest level of trust, right? Because that's where you're paying your bills out of. That's where you're living your life off of, right? You got to have a lot of trust there. And then you can have your savings accounts. And then that opens up an immense amount of opportunities to sell you other products, which is what SoFi wants to do. It also wants you to invest through them. It wants you to buy ETFs through them, right? It wants you to get your next car loan through them. It wants you to take out, your next mortgage with them, like et cetera, student loans, all that sort of stuff. And so SoFi just continues to impress me, man. They just keep the pedal to the metal. And JP Morgan said it best. I don't know if you guys got to see what JP Morgan was talking about. I think it was yesterday. This really matters significantly. JP Morgan, the big dog, the one that is the holy grail, the big dog. Everybody wants to be JP Morgan. SoFi would switch to be JP Morgan in a second. Everybody wants to be JP Morgan. Guess what they said? They said this is the most competitive banking environment they've seen since the great financial crisis. They said it's extremely competitive. They just had to take up their expense outlook substantially, several $billion essentially. Very competitive they're talking about. And I think it's from companies like SoFi. They're keeping the metal, because you understand, SoFi's members just keep climbing substantially every quarter. So they're stealing a lot of the next generation. And so, man, I wouldn't want to compete with them. They're tough. They're really, really tough. And so we got a winner. We got a chicken dinner here, right? And so this is another one that I'm up 226% on the stock in the public count, and I'm holding this close to my chest. Very, very close to my chest. I don't care what you offer me for SoFi. I'm not interested in selling them. Not right now, man. Not right now. This company is just, Anthony Noto's just executing on a high level. Whew. Palantir. Wow. Palantir announces a strategic partnership with the Navy, U.S. Navy. United States Navy announced a groundbreaking partnership with Palantir Technologies to deploy Palantir Foundry and Artificial Intelligence Platform, AIP, across the nation's maritime industrial base. The initiative, ShipOS, authorizes up to $448 million to accelerate the adoption of artificial intelligence and autonomous technology across the industrial base. Good. Here's the deal, okay? They got to keep these deals rolling through. They got to keep them rolling. The latest revenue growth from this company was 62.6%. Like, we've pushed the growth rates up so high for Palantir that if and when these growth rates start to come down, it's going to look like what happened to Palantir. You understand that Palantir went from 62% growth to 32% growth. people would be like freaking out. Like, oh my gosh, what happened to Palantir? They fell off. 32% growth would still be great, by the way. But when you're used to 62% now, people are like, oh. So this is why, like, Palantir's got to keep just having the deals pour in from the military side, from the government side in general, and especially from the commercial side, right? Because yeah, you got to keep this party going. And as soon as those growth rates start to decelerate in any significant way, that's where we run into trouble with Palantir stock, right? Here's the deal. 2-year forward P on the stocks, 198. Many stocks in the market trade in that 16 to 24 range. So we're not even, we're like in a whole different stratosphere in regards to P ratios, right? If you look at the forward price to sales ratio, 99, ladies and gentlemen, 99. Many stocks in the market trade in kind of the 1.8 to 2.6 range. So this is why Palantir just is in this situation where they just have to keep the revenue growth just in such an insane place, because as soon as that starts to shrink in any major way in terms of deceleration, the stock's ready to get crushed like a souffle, as Elon would say, right? Now, I want to share a message with you guys. It's very important that I posted inside my private stock group back just a couple days ago. I said 17 trading days left in 2025. I think we're down to 15 now. I said usually these last days of a year are upward and quiet. Markets start to die down more and more in terms of volume until just the day after New Year's. Sometimes you can get some last minute tax loss harvesting and some beaten down dog stocks. This is why some stocks will still downtrend in the last trading days of a year, even if the market's slightly uptrending. Sometimes you also get a return chase from funds. This is where fund managers buy up stocks that are volatile to the upside at the end of the year to try and generate positive alpha rate at the end of the year, so their returns can look closer to the S&P 500. If they underperform during the year, that might have been the longest run-on sentence I've ever had in my life. I'm sure my English teachers would not have been proud of that, but hey, English might have never been my best class. Huh? Business and accounting were a little bit better. Hope that makes sense. Stocks they might buy are stocks like AMD, nvidia, Palantir, Tesla, etc. Bottom line is, though, don't get caught up in all the short-term stuff the Wall Streeters do at year end. Stick to your game plan and let the rest be what it's going to be. Great next few weeks to spend time with family and look into some new stocks. And so that's what you got to understand. Stay focused on your game plan. Let the Wall Streeters do what the Wall Streeters are going to do. They're going to control whether the stock market goes up or down in the short term. If the Wall Streeters all want to sell, they're going to sell. And the market's going down. They all want to buy up, some of these risk-on stocks, Russell 2006, they're going to all buy them. And they're just going to move up. You can't do anything about that. You can ride the waves, right? We're just out here on our boats, riding the waves and having a good time. And we're going to stay focused on what we can control, what we can do, those sorts of things. Okay, ladies and gentlemen, hope you enjoyed today's video. I appreciate you joining me. Once again, if you're looking to join my private stock group, we only have that open here to new members for the last few days here. So if you want to get in before we close it to new members, you can do that. Send your Steel membership cards. That's a beautiful private group card. We have our unbelievable 1000X card. We'll send you. And the best one, if you join us on a lifetime basis, the lifetime membership card. Can't show you that, baby. That's the black card. It's beautiful. Much love and have a great day.